In this video, I am going to explain cash flow statement. So before we go for the problem, let me explain the basic concept of cash flow statement. See, the cash flow statement deals about the inflow of cash and outflow of cash. That is the total receipts and total applications. That is outflow of cash. Okay, the cash flow statement starts with opening cash balance. That is cash in hand and cash at bank. And you need to add all the sources. That is inflow of cash. So these are the different forms of inflow of cash. That is receipt of cash. So these things will be added along with the opening cash balance, and you need to subtract outflow of cash, that is application of cash. So these are the different uses of fund or uses of cash, and finally you will be getting closing cash balance and closing bank balance. So in your problem, the opening and closing cash in hand and bank balance will be given in the problem itself. Only you need to match the opening balance and closing balance with inflow of cash and outflow of cash. So the cash flow statements deals about different sources of cash inflow and different uses or application for which cash is needed. Okay, so it helps in taking short-term financial decisions and also to prepare cash budget for the next year, or that is a forthcoming period. See, before we prepare the cash flow statement, first we need to find the cash from operation. It is one of the important internal sources of cash. It has separate format to find out the cash from operation. Let us see the format for cash from operation. This is the statement of cash from operation. So the cash from operation start with fund from operation, and you need to add certain items along with the fund from operation, and you need to subtract certain item from the fund from operation. Finally, you will be getting cash from operation or cash outflow on account of operation. See here, first you have to start with fund from operation. So what is the meaning of fund from operation? First you need to find the fund from operation from the problem, from the profit and loss account or from the balance sheet. You can find the fund from operation. I have already uploaded a separate video for fund from operation. In that, I have explained two different methods how to calculate fund from operation in two different situations. So first you need to find the fund from operation according to the procedure, and after finding this, you need to add increase in current liabilities and decrease in current asset. So in your problem, you will be having two different data, that is balance sheet for current year and balance sheet for previous year. So two data, 2 years information will be there. With that, you can able to find any changes in current assets and current liability. If there is any changes, it may be increase or decrease. So here you need to add any increase in current liabilities and any decrease in current asset. So these are the two things will be added along with the fund from operation, and then you need to subtract two things, that is a increase in current asset and decrease in current liability. So this is a simple format to find out the cash from operation. First you need to find fund from operation, then add increase in current liability and decrease in current asset, and less increase in current asset and decrease in current liability. The final answer will be either cash from operation or cash outflow on account of operation. If the value is a positive value, means it will be cash from operation. If it is negative value, means it will be called as cash outflow on account of operation. See, if we get cash from operation, means this will be recorded under sources of cash, that is inflow of cash. If we get negative value, means that is cash outflow, means it will be recorded in application of cash, that is outflow of cash. So while you prepare the cash flow statement, you need to include this value, either inflow of cash or outflow of cash according to the answer. Next one is issue of share. So by way of issue of shares, the company can raise fund from the public. So it is also one of the sources of inflow. In the same way, issue of debentures. Okay, by way of issuing debentures also company can raise fund. So it is also one of the sources of cash inflow. The next one is sale of any asset. So when you sell any asset, cash comes in. So it is also one of the sources of cash. Then sale of investment also one of the sources of inflow. And next one is long-term loan. When the company borrow long-term loan from the bank, it is also one of the sources of cash, one of the inflow of cash. So these are all various sources of inflow. Now look at the outflow. Cash outflow on account of operation. When you prepare the statement of cash from operation, there is a possibility of getting positive value or negative value. If it is positive value means it will be called as cash from operation. If you get negative value, it is called as cash outflow on account of operation. So it will be recorded under outflow of cash. Then redemption of preference shares. Redemption means repayment. So redemption of preference shares. In the same way, redemption of debenture also outflow of cash. Then loan repaid. That is, you have acquired loan from the bank. No, when you repay that amount, it will be recorded in applications. Then any tax paid and dividend paid. So these are all different forms of outflow of cash. So after adding opening balance with different inflow, that is sources of cash, you will be getting total cash available. From this value, you need to subtract total outflow of cash, that is applications of cash. Then the balancing figure will be closing cash in hand and cash at bank. So in your problem, you will be having both opening cash balance and closing cash balance. Only thing, you need to match opening and closing cash balance with sources and applications. Let us see this problem. The summarized balance sheet of Joshita Limited as on 31st December 2013 and 31st December 2014 are as follows. So assets for 2 years and liabilities for 2 years are given. And look at the additional information. Depreciation of rupees 10,000 and 20,000 have been charged on land and machinery account respectively in 2014. For land, 10,000 depreciation. For machinery, 20,000 depreciation. You need to prepare separate ledger for land account and machinery account. And look at the second adjustment. An interim dividend of rupees 20,000 has been paid in 2014. Say, interim dividend will be paid out of net profit. No, this is the paper transaction. So, it is not going to decrease any fund. So, this will be added back along with the net profit while you calculate the fund from operation. Okay, and again you need to show the same item under application, that is outflow of cash. Why? Because when you declare dividend, this amount will goes out, that is outflow, that is application of cash. Okay, so here you need not prepare any separate ledger. Why? Because there is no opening and closing balance for interim dividend. Now look at the next one. Third one. Income tax 15,000 was paid during the year 2014. See, look at the liability side. We have provision for taxation. Opening balance 20,000, closing balance 25,000. This will be recorded under credit side and this will be recorded under debit side while you prepare the provision for taxation account. In that account, you need to record this transaction, that is tax paid. How much paid? 15,000 paid. Then you will be getting balancing figure. So that balancing figure will be considered as a provision made for current year. So for this transaction, you need to have a separate ledger account. You are required to prepare cash flow statement for 2014. So with this information, they ask you to prepare cash flow statement. So before you prepare the cash flow statement, first you need to find the fund from operation. And after finding the fund from operation, the next step is you need to find the cash from operation. After finding cash from operation only, you can able to prepare the cash flow statement. Before that, you need to have some ledger to show these adjustments. Let us see the working note 1, that is adjusted profit and loss account in order to find the fund from operation. The fund from operation can be calculated in two different methods. One is statement method and second one is adjusted profit and loss account method. So here I am going to follow adjusted profit and loss account to find out the fund from operation. So in the adjusted profit and loss account, you have to enter opening balance and closing balance. So opening balance will be credit side. By balance brought down. Profit and loss account, opening balance 30,000. It is under liability. No. So liability is always showing credit balance. So opening balance 30,000, closing balance 40,000. So credit side, by balance brought down. Opening balance how much? 30,000. Closing balance opposite side to balance, carry down 40,000. In the adjusted profit and loss account, you will be getting fund from operation. So after finding fund from operation, then you can prepare the cash from operation. A statement of cash from operation. Working note to a statement of cash from operation. Here you have to start with fund from operation and you need to add certain items and you need to subtract some items. So before we prepare this, we need to work out some ledgers to find out some values in land account, machinery account and provision for taxation account. See, look at the first adjustment. Depreciation of 10,000 for land and 20,000 for machinery. So you need to have a separate ledger. For land, separate ledger and machinery account, separate ledger. So look at the balance sheet asset side. Land, opening balance 1 lakh, closing balance 70,000. Machinery account, opening balance 50,000, closing balance 1,50,000. See, in land account, land is an asset, no. So asset always showing debit balance. So you have to start with debit side. To balance, brought down, how much opening balance? 1 lakh. Closing balance opposite side. By balance, carry down. How much? 70,000. How much depreciation is given in the adjustment? For land, 10,000, no. So depreciation will be entered credit side of asset account. Here, by depreciation. How much? 10,000. Now, get the total. Debit side, how much? 1 lakh is there. So debit side 1 lakh, credit side 80,000 is there, no. So record 1 lakh. Here you will be getting balancing figure. So how much balancing figure here? 1 lakh minus 80,000, 20,000. See, when you prepare asset account, if opening and closing balance is there means, if you find any balancing figure either debit side or credit side, if debit side balance means it will be considered as a purchase. If there is any balancing figure in credit side means, which is nothing but sales. That is by cash within the bracket sale. Sale of land how much? 20,000. If you get balancing figure in debit side means you need to write to cash within the bracket purchase. Balancing figure is sales, 20,000 sales. Now just see, here we have entered two things. Apart from opening and closing, we have recorded two things. One is depreciation, another one is balancing figure, that is sale. So this depreciation is a non-fund item, no. This will be added back along with the net profit while you calculate the fund from operation. And this is a sale, no. So it is an inflow of cash. While you prepare the cash flow statement, this will be recorded in inflow of cash. In the same way, you need to prepare machinery account also. So machinery also is an asset, no. Debit side, start with debit side. To balance, brought down, opening balance how much? 50,000. Closing balance opposite side, by balance, carry down 1,50,000. Machinery account opening 50, closing 1,50,000. Look at the adjustments. Depreciation 20,000 for machinery by depreciation. Depreciation will be recorded credit side of machinery account. How much? 20,000. Now get the total. Debit side 50,000, credit side 1,70,000. Which one is highest value? 1,70,000, no. So enter 1,70,000 both the sides. Here you are getting balancing figure. How much? How much balancing figure? 1,20,000. I told you, no, if any balancing figure either debit or credit, it will be considered as a purchase or sales. If it is debit side means to cash, that is purchase. When you purchase any item, cash goes out. So outflow of cash, no, this will be recorded under application. And this will be recorded under fund from operation. While you calculate fund from operation, this will be added along with the net profit. Good, the next adjustment here. Income tax 15,000 was paid during the year. So we have opening and closing balance for taxation. No, look at the liability side. Provision for taxation, opening balance 20,000, closing balance 25,000. Now we have to prepare separate ledger for this transaction. Provision for taxation account, it is a liability, no. So liability is always showing credit balance. So credit side, by balance, brought down. How much opening balance? 20,000. Closing balance, here opposite side, to balance, carry down 25,000. How much amount paid as a tax? 15,000. No. Enter debit side. To cash, that is paid. Tax paid how much? 15,000. So to cash 15,000. Now get the total. Debit side 40,000. Credit side 20 only. No. So record 40. Now you will be getting balancing figure. How much? 20,000 balancing figure. This will be transferred to profit and loss account. That is provision made during the year for tax. So this is a provision made during the year. So already you had opening balance of provision. This is closing balance of provision. And with this they have paid 15,000. Now the balancing figure is 20,000. No, this 20,000 will be transferred to P&L account debit side. Provisions made during the year. This is a paper transaction. Okay. So this will be added back along with the net profit in order to find out the fund from operation. Apart from the opening and closing balance, here we have recorded two things. No, one is tax paid. How much? 15,000 paid. That is cash outflow. While you prepare the cash flow statement, you need to record this under application. That is outflow of cash, and this will be recorded while you prepare the fund from operation. This will be added back along with the net profit. Now let us see the adjusted profit and loss account to find out the fund from operation. Now see the adjusted profit and loss account. Already we have entered opening profit and loss account and closing profit and loss account. Now you need to enter certain item on a debit side and you need to enter certain items under credit side if any. Now look at the working notes. In the land account, we have entered depreciation. No, this is a non-fund item. This will be added along with the net profit. No, so while you prepare the adjusted profit and loss account, this will be entered debit side of adjusted profit and loss account. To depreciation, how much? 10,000 for land. Now look at the machinery account. Here also we have entered depreciation. How much? 20,000. No. Again this will be recorded under debit side of adjusted profit and loss account. To depreciation for machinery. How much? 20,000. Look at the next ledger. Provision for taxation. Here we have made provision. No. How much? Current year provision. How much? 20,000. No. This will be entered under debit side of adjusted profit and loss account. That is provision made during this year. How much? 20,000. This amount we have taken from working note 3. This one is working note 4 and this one is working note 5. Now look at the balance sheet. Just focus only non-current asset. That is the first one is goodwill. It is a non-current asset. No, just find the difference. Last year 1 lakh, current year 70,000. What is the difference? 30,000 decreased, which means goodwill written off. This will be recorded under debit side of adjusted profit and loss account. To goodwill written off. How much? 1 lakh minus 70,000. Difference 30,000. Then look at the land. Land we have already prepared a separate ledger and we have entered the depreciation under debit side of adjusted profit and loss account. Machinery account also we have entered the depreciation under debit side of adjusted profit and loss account. There is no adjustment regarding investment. So just find the difference. Last year 10,000, current year 20,000. What is the difference? 10,000 increased, which means purchase of investment. So this will be shown under application of fund. Next one is preliminary expense. So it is also non-current asset. Just see the difference. Last year 15,000, current year 10,000. 5,000 decreased, which means preliminary expense written off. It is a non-operating expense which is not going to decrease the fund. This will be recorded under debit side of adjusted profit and loss account. Preliminary expense written off. Last year 15,000, current year 10,000. Difference 5,000. Look at the next item. Data, stock, bills receivable, cash in hand and cash at bank. So these are all current asset. So this will be recorded while you prepare the cash from operation. So all the current assets can be recorded under cash from operation except cash in hand and cash at bank. This will be a starting point for cash flow statement. So except cash, all other current assets will be recorded while you prepare the cash from operation. Now look at the liability side. Equity share capital. Last year 2 lakhs, current year 3 lakhs, 1 lakh increased, So this is also one of the sources of cash. This will be recorded under inflow of cash. Next, 8% redeemable preference shares. Last year 1 lakh 50, current year 1 lakh 50,000 decreased, which means redemption, that is repaid. Redemption of preference share, how much? 50,000, that is outflow of cash. This will be recorded under outflow of cash, that is application of cash. Next, general reserve. So general reserve last year 40,000, current year 70,000, 30,000 increased. So this amount, this reserve is made out of net profit. So this is not going to decrease our fund. This is only paper transaction. So the difference will be added back along with the net profit while you calculate the fund from operation. Here we are preparing adjusted profit and loss account. No, just find the difference and enter under debit side. What is the difference? 30,000. No, enter debit side of adjusted profit and loss account. To general reserve transfer. Last year 40,000, current year 70,000. How much increased? 30,000 increased. No, so enter here. It is a non-fund, that is a paper transaction. This will be entered under debit side of adjusted profit and loss account. Next one is profit and loss account. So this we have already entered in adjusted profit and loss account. We have entered opening amount under credit side and we have entered closing amount under debit side. Next one is creditor. It is a current liability. So this will be entered only while you prepare the cash from operation. Bills payable also current liability. Liability for expense, that is outstanding expense. So this is also current liability. And next one is proposed dividend and provision for taxation. So provision for taxation we have already adjusted. We have prepared the separate ledger for provision for taxation and we have got the balancing figure 20,000 that is already recorded in adjusted profit and loss account. And next one is proposed dividend. So in the previous video, I have already explained that the proposed dividend and provision for taxation can be considered either current liability or non-current liability according to the adjustment. Here we have adjustment for provision for taxation. So it is not a current liability. It is a non-current liability. For proposed dividends, there is no adjustment regarding this. So we have two options. One is we can consider this as a current liability or non-current liability. So now I am going to consider this as a non-current liability. For non-current liability, you have to enter this amount in two places. One is the last year, that is the opening balance is the last year provision. Assume that this amount is paid during this year. Okay, so this amount will be considered as a paid. Okay, so last year provision, current year paid. This amount will be considered as a current year provision. This amount we are going to pay in the next year. So for the current year adjusted profit and loss account, you need to record this amount, that is provision made this year. No, so this will be recorded under debit side of adjusted profit and loss account, and this amount is last year we have made provision and current year we have paid. So this will be recorded only prepare the cash flow statement. This will be recorded under outflow of cash, that is application of cash. See, in the adjusted profit and loss account, debit side, to proposed dividend provision. How much? 50,000. Look at the adjustment. We have considered all these things. Look at the second adjustment. An interim dividend of rupees 20,000 has been paid in 2014. This will be recorded in two places. One is adjusted profit and loss account debit side and application of cash, that is outflow of cash. In adjusted profit and loss account debit side, to interim dividend. How much? 20,000. So there is no entry for credit side according to this problem. Now you get the total. You can able to find out the fund from operation. 10,000, 20,000, 20,000, 30,000, 5,000, 30, plus 50 plus 20 plus 40. What is the total? 2,25,000. And enter the same amount under credit side also, 2,25,000. Here we have only 30,000. So what is the balancing figure here? 225 minus 30,000. 1,95,000. Right? By fund from operations. Balancing figure. Okay, see, in the statement method, how we used to prepare? In the statement method, what is the procedure? First, we have to start with closing net profit. Okay, and you need to add all these items along with the closing net profit and subtract opening net profit. You will be getting funds from operation. The same thing only, but in a different form. In a statement form, but this is a T format, that is adjusted profit and loss account method. Funds from operations, how much? 1,95,000. Now you have to prepare the cash from operation. There you need to start with this value, that is fund from operation 195. Now you need to find the cash from operation. This is a statement of cash from operation. Here you need to start with funds from operations. How much? 1,95,000. Enter outer column. Here you need to add certain items and you need to subtract certain items. So according to the format, you need to add decrease in current assets and increase in current liabilities. If there is any decrease in current assets and increase in current liabilities, those things will be added back along with the funds from operation. And if there is any increase in current assets and decrease in current liability, those things will be subtracted from this value. First you need to have fund from operation, then you need to add decrease in current asset and increase in current liability, and you need to subtract increase in current asset and decrease in current liability. Now you have to look at the balance sheet. Look at the current asset. The first one is debtors. Last year 1,50,000, current year 1,80,000. What is the difference? 30,000 increased. Cash from operation, any increase in current asset, it will be recorded here. That is less item. Debtors 1,50,000, current year 1,80,000. So increased, no. So how much? 30,000. Stock. Last year 70,000, this year 1 lakh. So this is also increased. How much? 30,000 increased. Any increase in current asset? Here. Stock 70,000, 1 lakh. How much amount difference? 30,000 increased. Bills receivable. Last year 20,000, this year 30,000. Again increased. How much? 10,000. Increase in current asset. Bills receivable. Last year 20,000. This year 30,000. 10,000 increased. Except cash in hand and cash at bank, we have entered all other current assets. Okay, now look at the current liabilities. Creditors. Last year 25,000. This year 50,000 increased. Any increase in current liability, that will be recorded here. That is add item. Under add item, increase in current liability. Last year 25,000. This year 50,000. So 25,000 increased. So increase in current liability will be added back. How much? 25,000. Then bills payable. Last year 10,000. This year 6,000. What is the difference? 4,000 decreased. Any decrease in current liability will be subtracted. So under this heading, bills payable. So last year 10,000. This year 6,000. So 4,000 decreased. Next one, liabilities for expenses. Last year 23,000. This year 6,000 decreased. So liability for expenses. How much? 23,000 minus 6,000. 17,000 decreased. We have entered all current assets and current liabilities. Now find the total. Here there is no decrease in current asset, put dash. Increase in current liability how much? 25,000. Add along with 1,95,000. 2,20,000. Now find the 30, 30, 60, 70, 74 plus 17. 91,000. Subtract 91,000 from 2,20,000. 1,29,000. We have got positive value. No, this amount is called cash from operation. It is a main sources of inflow of cash. This will be recorded in inflow, that is sources of cash while you prepare the cash flow statement. Now let us see the final one, that is cash flow statement. See, this is the cash flow statement format. Joshita Limited, that is the name of the company. Cash flow statement for the year 2014. Particulars, inner column, outer column. You have to start with opening cash in hand and opening cash at bank. Look at the balance sheet. Cash in hand. This one is opening balance. This one is closing balance. Cash at bank. This one is opening and this one is closing balance. So opening balance how much? 15,000 and 10,000. Enter inner column 15,000 and 10,000. Total opening balance how much? Total opening cash 25,000. Now you need to add sources of cash and you need to subtract applications of, that is inflow of cash and outflow of cash. See, under sources of cash, first thing you need to write the internal sources, that is cash from operations, that we have calculated now. According to statement of cash from operation, what is the answer? Cash from operation 1,29,000. No, it is an internal sources of cash 1,29,000. Apart from this, some other sources also there. Look at the liability side. Equity share capital. Last year 2 lakhs, current year 3 lakhs. 1 lakh increased, which means issue of shares in order to raise the share capital. It is also sources of cash, that is inflow of cash. Issue of shares. How much? 2 lakhs last year, current year 3 lakhs. Difference 1 lakh. No, 1 lakh is a inflow of cash. Here land and machinery. Okay, we have prepared separate ledger. No, just refer the ledger. In land account, what is the balancing figure? 20,000. No, that is a sale of land. This is an inflow of cash. This will be recorded under sources of cash. Under sources of cash, sale of land. How much? 20,000. In machinery account, what is the balancing figure? 1,20,000. No, so that is a purchase. It is an application of fund, that is outflow of cash. 1,20,000 will be recorded under outflow of cash. Purchase of machinery 1,20,000. Then provision for taxation account. What is the balancing figure? This is the balancing figure. No, this amount we have already entered in the adjusted profit and loss account. Here we have paid 15,000. No, it is also outflow of cash. Application of cash. Tax paid. How much? 15,000. Now look at the balance sheet again. Here certain items we didn't enter. No, just see that entries. So 8% redeemable preference shares. Last year 1,50,000. This year 1 lakh. Difference 50,000 redeemed. That is repaid. That will be recorded under outflow of cash. 8% redeemable preference shares redeemed. That is repaid. How much? 50,000. Once again check whether you have entered all the items or not. Just see, these are the items we have entered. Look at the asset side. Okay, here we have investment. So investment we didn't enter anywhere. So last year 10,000, this year 20,000. 10,000 increased, which means purchase of investment. This will be recorded in outflow of cash. In the application of cash, purchase of investment. How much? Last year 10,000. This year 20,000. So 10,000 increased, no. So purchase of investment 10,000. In the cash flow statement, we have started with opening cash in hand and opening cash at bank. Our final answer will be 17,000. That is closing cash in hand and closing cash at bank. See, look at the liability side. We have entered all the items. See, proposed dividend. This 50,000 we have already entered in adjusted profit and loss account. This 42,000, that is last year provision, current year paid. Last year we have made provision for proposed dividend and this year we have paid. So this will be recorded in application of cash. Proposed dividend paid. How much? 42,000. So all the items we have entered. Look at the adjustment. Depreciation we have entered. Interim dividend. An interim dividend of rupees 20,000 has been paid. No, this must be entered in two places. One is debit side of adjusted profit and loss account and application of cash. That is outflow of cash. Interim dividend paid. How much? 20,000. Now find the total. So we have started with opening cash in hand and cash at bank. Now you need to add the total sources of cash. 129 plus 1 lakh plus 20,000. What is the total? 2,49,000. Opening balance 25,000. No. Now this is the total sources. Total cash inflow. What is the total? 2,74,000. That is opening cash in hand and cash at bank and total inflow of cash. That is total sources of cash. So this is the total cash available. Total cash available. From this we have made this outflow of cash. These applications we have made out of 274. Now find the total for outflow of cash. How much? 2,57,000. Total cash available 274. Total payment made or total outflow of cash 257. What is the closing cash balance? 17,000. That is closing cash balance. We have started with opening cash in hand and cash at bank. 15,000 and 10,000. 15,000 and 10,000. 25,000. We have added total inflow and we have subtracted total outflow. So now we have got the closing cash in hand and cash at bank. Look at the problem. Closing cash in hand 10,000. Closing cash at bank 7,000. Total 17,000. We have matched opening and closing cash balance with sources and applications. How much? 17,000. No. Closing cash in hand 10,000. Cash at bank 7,000. Total 17,000. Thank you.